Hey everyone, welcome back to Upside Down Data. Today I want to talk about Bitcoin and where we might be heading next. So it's been a while since I've talked about the more macro picture with Bitcoin and some on-chain factors with Bitcoin. So that's what I'm going to focus more heavily on today. So, yesterday was a pretty brutal day for Bitcoin. We dropped almost 4% on the day. A lot of people really started panicking at that point. People said, all right, it's May, it's a new paradigm. Bitcoin's just going to fall off a cliff. Of course, we've now bounced. And this is something I talked about before, where I think it's plausible that Bitcoin's going to chop around in this kind of range for a while. But another thing they have to keep an eye on, especially in the short term this week, is that the Fed is having their next meeting, and they're going to be making their decision tomorrow, as I record this, on May 3rd, about whether or not to raise interest rates again or to keep them the same. And if we just go over and look at the CME Fed Watcher tool that they have, basically, we're able to look at what the market is predicting probabilistically in terms of which decision they're likely to make. What we can see is that the market overwhelmingly is predicting right now that the Fed is going to raise by another 25 basis points. So that's the base case for the market. So going into that, I would expect that if the Fed just does exactly what people expect, it probably won't really change things too much. This has basically already been priced in, so it's not really going to probably change things all that much if the Fed does this. What could be a pretty massive deal is if the Fed surprised people and ended up pausing right here. That's where I could see Bitcoin breaking out of this range to the upside, for example. And another thing that's important to keep an eye on, of course, always, is what broader markets are doing. What is the stock market doing? And so with the S&P 500, which I'm looking at right here, it's really been stuck in basically a sideways range ever since, really kind of all the way back in May of 22, kind of all the way through here. You can kind of look at this as more or less just the market going sideways. And so again, if we got a pause, that could be something that would allow the stock market to break to the upside as well, which would be a good sign for Bitcoin. A lot of people have been talking about how, Bitcoin has now decoupled from the stock market. It doesn't matter what the stock market does. I'm not going to go there that fast. I think what the stock market does very much matters for Bitcoin. And so if the stock market can go and break above kind of this local resistance here in February and go up, maybe retest the August highs, something like a Fed pause could be a catalyst of that, but that's certainly not essential. Market could trend up in other reasons. That would be another reason where Bitcoin might be more likely to break to the upside. Of course, though, the opposite is also something we have to keep in mind, that if this resistance holds and if the stock market moves back down, staying in this range, gets rejected to the downside, that could be another factor they'll look at that would make me maybe think more likely that Bitcoin could move down a bit lower. And so there might be some retests of lower levels. One level to watch in a scenario like that could be the 200-week simple moving average. We broke above that back here in March. And I was talking before on Twitter, and I still think it's reasonable to expect that at some point, Bitcoin's going to go ahead and retest this level, and if it remains bullish, it will hold it as support and be able to continue moving to the upside, or we could get a bearish breakdown that might herald us having to go back down and retest some of these deeper lows. But certainly if the market takes a more decidedly bearish stance, so let's say the stock market starts really falling off convincingly, then a retest of these levels is quite plausible from where I'm standing. And the other factor that I'm looking at as well on the macro space, or just another thing that's useful to keep an eye on, is the DXY. So this is how the strength of the dollar relative to a basket of other prominent currencies. And generally speaking, the reason why people watch the DXY in the crypto space is that if the DXY is bullish, then that is bearish for crypto and risk assets. So in these cases where the dollar is ripping to the upside, like of all of last year, 2022, risk assets tend to do terribly in that environment. Vice versa, as the dollar is falling off a cliff, tends to be good for risk assets and Bitcoin. And certainly that's what we've seen. Here, this kind of led into then the bullish movement we saw with Bitcoin going into this year. So what I'd be looking for is if this kind of double bottom we're seeing right now in the DXY, if this actually ends up breaking to the downside, we go back down into some of these lower levels that we haven't seen since early 2022. That would be another indication that conditions are allowing for further movement up for Bitcoin. If that doesn't happen, if dollar holds this level or starts rallying to the upside, I think Bitcoin is going to start moving down. So those are some things that I'm looking at in the broader macro environment. Now, if we switch over to some on-chain data that I think is useful to watch, here what I'm showing is the distribution of realized price for Bitcoin at different price levels. So basically, realized price is the price at which a Bitcoin was spent. And that's being observed basically just by on-chain activity. Have people spent Bitcoin on-chain? Have they moved that Bitcoin? What price did they move that at? Did they spend that Bitcoin at? And then we can just basically get a distribution of how many Bitcoin were spent at different price ranges. Get this nice little histogram that shows the distribution of realized price across the Bitcoin, across price. And realized price is important because the price at which a Bitcoin was spent was also the price at which it was bought by someone else. Becomes their cost basis. Talked about this before, where people get much more sensitive to price movements around their cost basis than if price is really far away. Prospect theory, it's a psychological theory. People are much more sensitive to movements close to that break-even point, their cost basis. And so what that can mean is that if you have a large amount of cost basis at a point, and then price falls back to that point, it can act as support. People are paying a lot of attention. As it gets back, they might step in to defend that cost basis, or if they saw it as being a value time to be buying Bitcoin in the past, and thought that price level is a good time to be acquiring, might see it as a good time to acquire some more. Likewise, as price gets up towards cost basis, so up as people are getting out of loss towards break even, they might also then be paying a lot of attention and then decide to cash out at break even and then just basically cut their losses, say, well, at least I didn't lose any money, basically. So that's another reason where you can see support happen as price falls into cost basis and resistance as price enters into cost basis. Where we stand right now at around 28K, we're kind of in no man's land. We're kind of in a place where not really many Bitcoin have transacted at those levels if we look at longer term holdings. So here I'm excluding everything lower than 140 days. These tend to be short-term holders who enter and exit positions very rapidly. It's not likely that their cost basis would be as meaningful as longer-term holders. People who have been holding for at least 140 days puts them into that kind of long-term holder category who, if they decided to hold this amount of time, they're less likely just people who are quickly entering and exiting like short-term traders. And so what we might expect to see is that if price moves back into the 30K range, we're going to have to move again through this potential resistance. We got rejected the last time we tried to do that here up at 30K. We'll have to try to break through that level. And then it's going to be a bit of a slog through the 30Ks, but really we're not going to see a big step up in resistance potential until we get up to closer to 40K. And once we get up to 37K and then up to around 40K, that's the next big kind of swell in the amount of Bitcoin that sits there. And that's where my base case has been, that if Bitcoin can have another leg up, another bullish impulse, and we can slice up through 30K, I would really be looking at that 40K level as maybe being that point where we might start to reach that extreme amount of resistance that could mark a more notable top. If we're going to compare it to 2019, 40K very well might act like the 11, 12, 13K back here in 2019. That is certainly a possibility when we just look at this on-chain signature. So that's something I'm going to be watching. And if we fall back to the downside, we might be looking at something around 24, 25K as being some pretty strong structural support here. And that would be, if we fail to hold the 200-week moving average, which is now higher. That's now up at around 25, 26K level. The next level for potential support I'd be looking for is closer to 24, 23K. We see that there's now all this new kind of long-term holder cost basis that's now accrued in these general levels. So that's what I'm looking for on-chain. And the final thing I wanted to talk about was one of our indicators, momentum bias indicators. So this is something that tracks momentum in the market. So is momentum biased to the upside and really pulling price up with it? Or is it biased to the downside, really pulling price down with it? What we can see is that, we had been in a very telltale bearish behavior on the MBI in 2022, spending a lot of time down in the negatives, attempting to break out to the positive momentum bias, getting rejected, falling back to the downside. Exact kind of thing you see in prior bear markets. But now we're entering into a paradigm, and I've talked about this before, of this kind of oscillation around zero, which oftentimes marks points of transition out of bearish times into potential bullish times. And that's one thing that we can look at to make us think that it's plausible that the November lows were the kind of cycle lows for Bitcoin, the bear market lows for Bitcoin. Nothing's guaranteed. Certainly if we entered a recession, if stock market falls off a cliff, has a massive crash, all bets are off. Who knows what's going to happen in that scenario. But assuming nothing super severe like that happens, then what we're looking at right now is very much a bullish long-term signature for Bitcoin. That no matter what happens in the short term, and a lot of what I've talked about here more recently has been about the short term. Can Bitcoin get above 30K? We'll have to go back down, retest the lower 20Ks, things like that. When you zoom out, a lot of that might not really matter when we look forward. If you just look on the chart, people were probably really wringing their hands and worrying back over here, in 2019, or back over here, kind of coming out of this bear market here, 2015. When we look back at that now, we say, well, who cares? This was all just a fantastic time to acquiring Bitcoin because we know what happened next. And it would not surprise me if in a few years we look back at this again and say, look, all the signs were there. Look at what the MBI was doing. It was behaving exactly the same way it behaves in these transitions out of bearish times that's going to send us into bullish times. And even if there is short-term turbulence and short-term chopping around or having to go down lower, it might not ultimately matter in the longer term. So obviously not financial advice, but I think that's just an important thing to always do in the markets, that we can get really caught up in these short-term movements. And certainly those are useful to watch and they're important to watch, what's going to happen in the more short run. But long-term, what oftentimes ends up being the case is that when we look back in hindsight, we just don't really even care about that. All the emotion and all the panic and bullishness and greed and everything that plays out in very small price swings, ultimately, it doesn't really matter in the grand scheme of things. It's just, generally speaking, this is a good accumulation zone or this is a good distribution zone without really worrying about those small movements, a few percent one way or the other. Certainly, the MBI is painting a more bullish picture, certainly, than it is a bearish picture long term. All right, if you like the content, remember to subscribe to the channel, give the video a like and follow us on Twitter. A lot of updates for our indicators, doing more over there. And check out our website, polaritydigital.io. That's where I'm at here right now, showing you this chart. We have live data from a bunch of our different models and more.